All right, fellow AMC stockholders, XMAX Trading here. Just want to go over some important DD regarding AMC right now, so let's get started. So GameStop and AMC short sellers lose $10.5 billion after clawing back this quarter. Investors betting against AMC and GameStop shares on the stock market are slowly limping on recovering from a small fraction of their losses following the company's share price increase this year. AMC and GameStop became the center of public tussle between retail and institutional investors, with the former inflicting heavy losses on the latter, after collectively purchasing the company's shares and driving the price to record highs. Buy and hodl. Buy and hodl. This led to billions of dollars in losses for hedge funds, and whose bets against both companies reversed. Some of those shorting GameStop faring better than their AMC counterparts since June, indicates the data from last week. So AMC was beating the hedge funds more than GameStop. GameStop's short sellers recovered $1 billion in losses since early June. The latest data courtesy of S3 Partners. Short sellers betting against AMC lost $4.8 billion. The picture was bleaker for those who targeted GameStop, with the data revealing the short sellers' year-to-date losses stood at $6.44 billion. What a waste of money. Cumulative shows that AMC and GameStop short sellers have lost $10.52 billion as we exit the third quarter. However, while these are staggering losses, data from the start of the week of June reveals cumulatively short sellers recovered 12.5% of losses since then. Back in June, AMC short sellers lost $4.5 billion. GameStop players bled $7.5 billion during the first 6 months of the year. The bulk of this beating came when GameStore's shares soared a record high of $343 per share. As the retail camp purchased the shares in bulk, some hedge funds ended up going out of business. What a waste of money. We waste so much money on hedge funds. Additionally, the short share interest, which stood at $90 million in June for AMC and $10 million for GameStop, now stands at $86 million and $7.7 million, respectively. These highlights the fact that institutional investors betting against GameStop have been more nervous about their bets than when compared to the ones who bet against AMC. Interesting, however, while AMC's short interest has dropped since June, recent data suggests they are rising again for AMC. For instance, in August, they stood at roughly $82 million, highlighting by the end of the week, more than 4 million short interest shares were added to the bets against the company. The picture is slightly similar for GameStop. In August, 7.2 million. However, in percentage terms, the negative sentiment against AMC appears to be stronger. This is underscored by the fact that AMC's short interest has grown roughly 10% since late August, and for GameStop by 6.7%. The growth in AMC short interest is also accompanied by a small increase in borrowing fee, which currently stands at 1.2% after a 13 basis point increase. For GameStop, their fee remains a static 0.57%. So the short fee for AMC is double? Almost double for GameStop. After closing at $164 for 23rd of August, GameStop shares jumped sharply to $210 the next day on the 23rd of August. Since then, it has dropped 8.6%. AMC share price closed at $36 by the 23rd, also jumped sharply to $44. Since then, it has dropped 7.4% to $40.29 at the time of publishing. Both GameStop and AMC are up pre-market trading as of publishing. So even if they make all this money back, if they're able to get the money back they bet against in their shorts, I mean, basically they'd be a net neutral for the whole year if they're able to do that. So they would have lost the whole year trading at the best. They can't make that money back. So yeah, it's permanent losses. I don't know who would invest money with these hedge funds anyway. All right. So looking at AMC, what we have here, I think that we have a reversal, to be honest. It's hit the Fibonacci pocket. This is between the 0.618 and the 0.65 is a golden Fibonacci pocket, which is a really high interest area where you see reversals. So looking at stochastic, I'd put this at 28 to kind of dampen down the signal, and it's definitely showing oversold conditions. MACD is reversing from bearish momentum. RSI is oversold as well. So hopefully this thing can reverse. That's at the 1 hour. Look at the 4 hour. Yeah, I mean, reversals coming in, I think. On the daily, this might sneak a little bit more over tomorrow, but I think that this will peter out at some point. So I think we have a reversal on the 1 hour. 4 hour looks decent, next day or two, who knows? But I think it's reversing reasonably well. Let's take this off. And let's look at the indicators, Bollinger Band. At the bottom of the Bollinger Band. So usually, hopefully you see reversion to the mean of the Bollinger Band at some point. Look at the 4 hour. Oh, it broke. It broke. This thing's going to go back up. RSI's. This thing's going to go back up. It's going to revert to the mean of the Bollinger Band at some point, unless there's some other catastrophe. And on the 1 hour, yeah, this is. Look what these fibs are. So hopefully it reverts back to the $40 level. Maybe at the end of the week. That's kind of my bet on it. We'll see how it turns out. Technical analysis. Look at the Fibonacci. Second article on continued technical analysis. We learned to leverage some of the most common indicators: exponential moving averages, MACD. Okay, so Fibonacci sequence. Yeah, we all know the sequence. 0 plus 1 is 1. 1 plus 2 is equal to 3. 3 plus 5 is equal to 8. 8 plus 13 is equal to 21. 2 preceding is the sum of the two preceding ones start from 0. It's a simple numerical sequence and ratios derived from our mathematical importance that transcends industry. How it's applied to finance and trading. Yeah, we know the Fibonacci retracement tools. Fib retracement. Surge continuously stop and decline and sharp in order to gauge how far the retracement will go. Is applied by counting two significant points. Yeah, we all know that. Fib retracement. Swing low to swing high. Swing low is the 1. 100% in the 0. And you want to bounce off either the 0.618. Well, it had the 0.615. Or the 0.5 and have it go back up. It reverts to that Fibonacci level, then I guess it declined from there. Of course, if you did the fib from here to here, you'd see that this failed the 0.618 up here. And this is reversed from swing low to swing high up there. Then you can tell this can go down lower in the future. In short, the levels indicate the percent of asset loss in value from the charted gain. If it touches 38.2 level, it is lost or retraced 38.2% of the gain. From the example, we connected the low of 3,148. Fell back, it lost. Okay. You also will see the price found support and bounced heavily in the golden pockets zone. I never knew about this until like today. The golden pocket zone would reverse the levels between 0.618 and 0.65. This zone is usually seen as a key range in which price reversal is likely. The 0.65 level is not included by default. You double click on your chart tool to add it, which I did with TradingView. 0.65, 0.618, that little pocket there. And you can look at extensions. Fibonacci extensions, yeah. Just look at additional resistance levels, yeah. The Fib extension is the same way the retracement tool. The key difference between the reversal of the levels, analyzing with 1 of the high and 0 of the low. Pro tip: make it simply reverse your retracement tool and it will automatically switch the levels, and you'll have a golden pocket zone included again. Again, the golden pocket zone from point. So you have to kind of flip. You do the retracement, you see, and then you look at the extensions, and so you got to reverse it sometimes depending on which direction you're looking at. So this thing went up, got rejected, and went back down. But you need extensions to go down here to see how far it could potentially go down. See, it's breaching over there, so there might be a Fibonacci level down here. Why former NYSE trader bought shares of AMC and Dutch Bros and Halbers. September 21st, Tuesday. Veteran trader David Green was back live trading on Benzinga Tuesday morning with long-term traders. He made some trades in highly flying stocks such as AMC. Shares of AMC traded lower Tuesday morning for the second day in a row. At one point, the stock was down more than 7% from Tuesday open price. Green recognized that AMC was reaching a pivot point, probably the Fibonacci pocket that we discussed, right, guys? You learned something today. Green recognized that AMC stock price was reaching a pivot point, and he put a buy order at 37.80. 37.80 is our pivot point. Green said the stock ended at 37.82, quickly reversing, gaining more than 3% in less than an hour. Let's go back. What about volume? Function, volume. Oh, yeah, there was increase in volume there. Selling, so 1 hour on the 4 hour. Volume's okay. Oh, volume on the green, boom, up. Volume on the day. Volume's kind of average. Volume is a lagging indicator. It's not useful in predicting. Although it's useful, like if you have these reversals and there's low volume. I've learned that recently. The low volume on the reversal on this decline suggests it is losing power and steam. So you kind of see volume kind of picks up. I'm kind of down here, but then it picked up. Let's look at the 1 hour. Volume, and then volume picked up, and then volume picked up, yeah. Volume on the downside, selling. Well, actually it picked up more volume here and went back up. So who knows, maybe it'll come back, volume decline, maybe it'll come back and then it'll swing back up. Hopefully it'll hit that. If it gets rejected from the middle Bollinger Band, that's going to go back down, but it will settle here, I think, in this channel. All right, guys, and that's all for today. We'll see what happens this following week. Till next time, later.